Hello guys. Now this is going to be a video from external range liquidity to internal range liquidity. Previously we have seen two videos. I hope we did. One on fair value gaps, the other one on market structure. All right. Now the goal of this video is to actually help you guys to form at least one model using just two concepts. One is knowing where the liquidity lies, which is at lows and highs, and the other is by using fair value gaps. Now, let us look into what this model is all about. Okay,
To understand our topic today, we have to understand two things. One, what is external range liquidity? Two, what is internal range liquidity? Now, for us to proceed, let me explain what is external range liquidity. This is the orders that sits at old swing highs and lows, and they serve as a drawn liquidity, which serves also as a price magnet. What is internal range liquidity? This is a POI where price usually reacts to, and then we see price going after swing highs and swing lows. It's usually a fair value gap. Now, let us illustrate what this actually looks like. When price makes a swing low and then makes a swing high, we usually see those places as external range liquidity. Now, in between that range that price just formed, we usually see a fair value gap being there. Our expectation is that price is going to go back inside that fair value gap once it starts to retrace, and then it's going to start chasing either the buy side or sell side liquidity depending on the kind of trend we are in.
now that we have looked into what internal range liquidity and external range liquidity is all about, let us look into some examples. Okay, using USDJPY as our case study on the 1 hour time frame. All right. So as you can see from here, price is reversing. We have already broken the structure down here. Okay. So far so good. We don't really have any fair value guys apart from this one right here. Now, I wouldn't really recommend this particular fair value gap. If you have watched my video on um, dealing ranges, okay, and premium discount, I wouldn't really recommend this particular fair value gap. Reason is because we are still below the 50% of the range, okay, meaning that we are still at discount price and want to see price going into premium. As we let price do its thing and play out, you notice here that we just entered into the premium price, right? And not just that, but like so far so good. Since that we're having a nice reaction here, even though we use this fair value gap, our stop loss would have been at this high around here. So basically, you wouldn't be taking out just yet, okay? But then I'm seeing a new price action forming around here, and it seems like you're very much bearish. This here is a bearish engulfing candle, but let us see what happens next. We have a breakout structure. So far, so good. No main breakout structure to the downside, but I think I would consider this. Okay, there we go. Now, this is exactly what we're looking for here. Okay, assuming we enter this from this fair value gap, we'll still be in profits, but then I needed something more concrete. Now, remember that we say that one of the evaluation criteria for these fair value gaps is that price shouldn't really close above here. Is an evaluation criteria is it gives out less probability. Okay, does not mean that's not going to work, but it gives out less probability. Okay, now besides, we found that in the discount area of price, so it's still a valid thing. It's best to be aware of what is going to happen next than not to be aware about it at all. Now, next up, we see here that we have a little sweep, we have price breaking down here, and then we get what? A fair value gap just here. So we want to see if this fair value gap is going to hold. It's going to be a valid fair value gap. Okay. Now, at this point, we see here that this here is internal range liquidity, right? And now, where do we want to head to? External range liquidity, which is this point just here. Okay. At this particular point in time, we want to see price coming back inside this fair value gap and then going down to our external range liquidity, right? And for that, we're going to use a sell. Okay. We're going to sell from where? We're going to sell from here all the way down to this particular external range liquidity. So we're going to use the high. Okay. And then here is our target at the low, giving us a 1:3.2. We triggered and hit take profits. As easy as that. This is internal range liquidity to external range liquidity at this point. Okay. Now, I want to mention something here. Okay, at this particular area, we are looking at it from the higher time frame perspective. But then, if you look into it from the lower time frame perspective, this here is a break of structure, right? So this here is also a low, and this is a high, right? External range liquidity, external range liquidity. A fair value gap inside here is internal range. Okay, so this fair value gap here is an internal range liquidity. Now we took a trade from here. We could have taken profit here, or we could have taken profit at the main target that we had before. Okay, so we took this with the idea that price was already reacting to another zone, another internal range liquidity, and then we saw a break of structure forming in the lower, in the inner structure of price. Okay, so you can either use the inner structure or you can use the lower time frames to find out where your POIs are lying at. Now let us continue. I want to just stay on the 1 hour time frame just to prove a point that you can be in one time frame and still find all these areas of liquid that we're looking for. Okay. Now this here is our new range from this high all the way to this low, right? So what are we looking for now? We're looking for something that's going to be from this high to this low. So this here is our new external range liquidity. All right. Now we need to see price reacting to something, and then possibly we'll see a fair value gap forming somewhere. At this junction, I feel like price is reacting to this particular down close candles here. As you can see, this is the last series of up close candles before the breaking structure, right? So, and is at the premium price. So I believe price is reacting to that. Now let us give a pause here and observe this. I've not actually backtested this before anybody will say that, oh, it's so easy for you to do it when you're backtesting. Well, it is easier, but then it's not something that I usually do. In fact, I barely backtest, to be very honest with you. So now we see here 3 down close candles, which is a nice thing. And now we want to enter from where? From the middle of this fair value gap here. Of course, price, if you're doing it on a live chart, price is going to be slower than that, but then you're going to have enough time to enter properly. Okay. So I'm positioning myself here. My stop loss at the high of the first candle. Where am I targeting? External range liquidity, which is where? Which is here. Okay. So once again, I'm using inner price structure to lead us into another 1:3. Let us see if that happens. Let's pause. Now, what do we have here again? We have another fair value gap. Okay. Now, hear me out. Still using our inner structure. What is this? This is a low, right? What is this? This is a high, right? From here to here is a new daily range, right? So this here is another external range liquidity, and we have here another fair value gap just here, right? So now, if you bring that out there, okay, you see here that this is another point where we could actually take a trade from, taking another trade from here with our stops just here and our targets just here. This one is actually going to be higher, giving us a 1:4.3, right? So we haven't gotten triggered yet, but let us see if that's going to happen. Now we got triggered. Is this still valid? Is this still valid? Is this still valid? It looks like I'm going to hit stop loss here. Oh shit, I hit stop loss. So yeah, eventually feels like price hits our first TP. So basically, how many what is our win rates right now? We won 1 trade, 2 trades. So this year, let's just assume that we're using 1%. Yeah. So we got 3% here, we got 3% here, and we lost 1% in this particular trade, right? So a total of 5%, okay, as a whole. Now, looking into this, we can see here that now we just formed a new daily range, right? So basically, we want to aim for a new low, right? So basically, this here is the new low that we have so far, unless price does keep moving downwards. So let us just wait and see what price does next. Okay, we see a new low being formed. So this here is our low. Okay, so basically we're going back up. All right, so where would I target from here? Okay, I believe that there will be some sort of fair value gap around here. Okay. We see here that this is a key level. Okay, and there's this high here as well, which to me looks like liquidity. Okay, so we might actually sweep that area and then we might see price moving from there. Okay, so let us keep on watching and see what price does next. We swept that high. Okay, we went up here. Like I said, this here might be liquidity. So let us be observant to see if we're going to have any signs that price is going to go downwards again. Okay, we are looking for a fair value gap, right? So let's also be working with fair value gaps. Do you have any fair value gap yet? I would say so. If you look at it from here, price swept, right? Formed a change instead of delivery, and then from this little fair value gap. Now, let me give you one hint about fair value gaps, right? I did not do this on time. Okay, that's mainly because the chart is moving too fast. Okay, so yeah, give me a break. Come on. Now, we do see here that it touched the 50%. Okay, the consequent encroachment of the fair value gap, which is here. So basically, this is like what a sniper entry, right? So something else that I want to say is that okay, I don't even know what I was saying again, but like yeah, we do have a trade here. Of course, it's the Asian session. All right. So basically, if you trade the Asian session, then this trade is for you. So what is the risk to reward ratio here? Since we're aiming for the lows, the overall low, this here would be a 1:10. Okay. Now remember, we already have 5% from these two trades here, right? Minus this one here, that is a -1. Um, what are we doing now? We are waiting to see if price is going to hit our target. Now, mind you, most prop firms actually accept 10%, right? So basically, let's look for another 5%, which should be around here. Okay. Let us see if we hit our targets. There we go. You just passed your phase one. As easy as that. So we just passed phase one. Okay. Um. So basically, in 4 trades, we have already passed phase one of our evaluation, right? So let us continue looking forward and see if we have any more information on price. Okay. So you passed your phase one, you're now getting to your phase two, right? So now we have another 5% to make there. Usually it's 5%. Some props might actually tell you 6%, right? So let us see what price is next. I'm pretty optimistic that price is coming down here. Okay. Eventually price does that, he enters there, and if you remember, this here is a 1:10. Okay, so we just got 10R here, 5 here, 5 here, so basically 20 altogether. Well, 19 if you are minusing this one. So now what do we expect next to same price? Okay, we had a break of structure just here, right? Then what else? We have a fair value gap here. It hasn't really been used, okay, not to me at least. This here is the 50%, so I'm going to take a trade from here. My stop loss is going to be here. My TP, well, we're targeting this particular place here, okay. Let's just make it a 1:3. What could go wrong, right? So yeah, let us see what price does next. We tapped in, we swept. We don't have any fair value gap yet, do we? Okay, no, we did form one here, but let us see what price does next. And voila, another 3%. So basically, if you continue following this particular way, we just locked in 3% in our phase two, right? And now we are shifting to the bullish side. Okay, we have a sweep, we have a break of structure, we have what fair value gaps around here, which is quite nice, by the way. So yeah, as you can see, this here is a strategy on its own. All right, what are we doing? Internal range liquidity to external range liquidity, internal range liquidity to external range liquidity. You can use this alone and make up a strategy out of it. All right, it's not that hard. It's literally not that hard. We are looking for an inverse fair value gap. Sorry, a fair value gap. inside the range. If it's a downtrend, look for the fair value gap inside premium. If it's bullish, look for a fair value gap inside the discount. We just passed phase 1, okay, and locked in another 3% in here. All right, so it's just to show you guys that it doesn't have to be that hard. Okay, if you're looking into this particular range right now, we would say that we have this as a high, we have this as a low, so price might be using this particular place now as an endorsement. If you have something here that was going to make price to react to it, I'm seeing here a possible key level. Price might reach up here and then reverse again, forming another fair value gap, and from there you sell. It's as easy as that. It doesn't get harder than that. So yeah, this is just to show you guys how to use the internal range liquidity and external range liquidity. That is, you're combining market structure, all right, alongside fair value gaps. So if this video was helpful to you, please do not forget to subscribe and drop a like. It helps me a lot. Thank you very much. I appreciate it. And I'll see you guys in our next video.